Hello everyone and welcome back to the Modern Investing channel. There is no doubt that more and more technology will enter our houses, and one of the clear trends is the replacement of ordinary vacuum cleaners with robotic vacuum cleaners. In this video, we will do a deep dive of iRobot, the leader in robotic vacuum cleaners. We will assess their opportunities and risks, and I will share with you at what price is iRobot a buy for me. Let's dive into it. iRobot designs and produces high-end robotic vacuum cleaners. It is the pioneer in the industry, and Roomba was featured for the seventh consecutive year in Amazon's Prime Day event as a top-selling product. There are many competitors in the market, however, iRobot managed to fortify its position in the high-end space, and no competitor has yet to challenge that position. If we look at the different geographical markets, and these figures comprehend sales of robots more expensive than $200 a piece, we can see that iRobot absolutely dominates the North American and Japanese market, has half of the market in the EMEA and 62% of the global market excluding China. So there is no doubt that this is a global leader. As I mentioned earlier, iRobot has a focus on the high-end expensive products, and it is often the innovator that brings new technology to the industry. The Roomba S9 Plus, for example, is the highest end product and costs upward of $1,000. iRobot has innovated with more than 200 patents on robot artificial intelligence and home understanding platform. These technologies allow the robot to map the home and understand where objects are and where it should go to clean and where it shouldn't. It also allows to command from the smartphone in which room of the house the robot should go or when it should start and stop. The industry has been growing at a 23% compounded annual growth rate in the last 5 years, and iRobot has been following the trend quite at the same pace, with a 22% growth. Quite strong and consistent growth over the years. If we look at future estimates, we can see that this year the market is supposed to grow almost 18%, and in the next year until 2025, the market is also expected to grow at 18% per year. So less than the 23% growth rate that it enjoyed in the past 5 years. Also, it is to notice that APAC will be the geography with the highest growth, 40% of the total. And it is to notice that APAC is currently the smallest market for iRobot, with only 16% of the sales. So it might become a much more important part of the revenue pie in the future. From the Q2 2021 conference call, there were a few important takes. The good news were that iRobot is planning on introducing 2 new Roomba robots, which will hopefully fortify its market dominance. It is still the market leader. It occupies 8 out of 10 of the top selling robotic vacuum cleaners in the US, 6 of the top 10 in EMEA, and 9 of the top 10 in Japan. Regarding the US-China tariff war, iRobot might receive a tariff exemption, helping profitability. And this is important because there is currently tariff uncertainty and it is hurting gross margins. They are diversifying production out of China to Malaysia. Half of the products sold in the US are now produced in Malaysia, which in the long term helps circumventing tariffs. The bad news, on the other hand, were a challenging supply chain environment. Shipping activity disruption in the Southeast China Sea made iRobot unable to fulfill a $17 million in orders. And then there is currently a chip shortage, which is hurting many industries besides robotic vacuum cleaners. This is forcing iRobot to source chips in the aftermarket, and this will hurt profitability in the short term. Furthermore, the before mentioned tariff uncertainties are not solved yet, and that will create uncertainty into the future profitability. So, what is the fair value to pay for iRobot stock? We will find that out after looking at the financials and growth prospects, and with those metrics, we will then run a discounted cash flow valuation. If we look at revenues in the past 10 years, and by the way, all these numbers are in millions, revenue grew nicely and steadily, making a compounded annual growth rate from 2011 to today of 14%. From 2016, we can notice that the growth became much faster, and if we were to make the calculation of the growth rate from 2016 to this year, we would get a 21% growth figure. This is a positive because it means that not only the growth is consistent, but is even accelerating. If we look at profitability measured as net income and free cash flow, we can see that they also grew over the years, although free cash flow has been more volatile with even a negative number in 2017. Let's figure out why that is. Free cash flow is the sum of operating cash flow and cash from investing activities. Operating cash flow is the cash that the core business operations bring in, which you see in this row here. And cash flow from investing activities, which you see here, is essentially the cash that iRobot used for investments, like building a new factory or purchasing equipment. We can see that in 2017 there has been a huge outflow of cash for investments, which is the reason why free cash flow in 2017 was so low. We can also see in the previous year, in 2016, iRobot hasn't spent anything in investing activities, suggesting that those expenditures have been pushed forward and concentrated in 2017. Margin are a very important measure to look at for examining the health of the business and whether it is going the right direction. We have here gross margins, which is a measure of how much money were left after the company had to pay for the manufacturing and sales of the goods, operating margin, which is the same, including operating expenses, and net income margins, which is a measure of how much revenues end up as earnings in the bottom line. We can see that in the long-term average is 46% for gross margins, 9% for operating margins, and 7% for net income margins. In 2020, all these metrics were above the average, but in the trailing 12 months, they got a hit. The reason for it is what we discussed above, the chips shortage, tariffs, and shipping supply chain disruptions that made it more expensive to produce and sell the goods. Number of shares remained stable over the years. So what are the growth drivers for growth and profitability going forward? We start with iRobot Select Service, which is the new recurring revenue stream. It is an all-inclusive membership for which you pay a recurring fee and you get robot accessories, extended warranty, and upgrade to the latest robot every 3 years. So you don't have to put upfront the hundreds of dollars to buy the robot. It started very recently and we shall see how it picks up going forward. Then there is the fact that there will be 2 new products launching. We don't know whether this will be a great success, but it is certainly a possible driver. In general, we have the high quality of the products that gives them a competitive edge in the high-end market. For instance, the home intelligent platform, which is still unmatched by competitors. The market as a whole is expected to grow at 18% growth every year from 2021 to 2025, so that is certainly an anchoring point. All these growth drivers need to be matched by the short-term uncertainties of supply chain disruptions and tariffs. So the question is, do we expect iRobot to grow faster or slower than the market, and how is that justified? If we look at the long-term free cash flow growth, we can see that it was 18%. However, because the last 1.5 years have been so special, I made a calculation from 2011 to 2019, and that gave a more conservative growth rate of 14%. And keep in mind, we just said that the market is expected to grow in the next 5 years at 18%, which is more bullish than the 14% we have here. Based on these numbers, I made 3 scenarios which we can use to calculate the fair value of the stock based on a discounted cash flow model. A bearish scenario where iRobot free cash flow will grow slower than the market at 12% in the next 5 years and 10% in the 5 subsequent years. And the terminal multiple of the business will be at the lowest level it ever traded, 11.8. A most likely scenario where iRobot free cash flow will grow in line with the market at 18% in the next 5 years, and then slightly below the long-term average in the next 5 subsequent years at 12%. The terminal free cash flow multiple will be the one that it has today, which is 14. And then a bullish scenario where iRobot free cash flow will grow in line with the market at 18% in the next 5 years, and then growth drivers will outweigh the short-term risk factors, delivering a 15% growth in year 5 to 10. The terminal free cash flow multiple will be the average of the last 10 years, which is 30. Here you can see an example of the calculation with the growth rate, discount rate, assets and liabilities, and share outstanding. The starting free cash flow figure is what they made in 2019, and all these numbers are in millions. In the discounted cash flow row, we see all the discounted cash flow values until 2030 and the terminal value. Here we have calculated the intrinsic value of the business and corrected for current assets and debt. Over here we have the present value of the stock. I made an overview of the different cases and I added another column of calculation made with a 15% discount rate, which is what I target myself as an investor. The bottom line is that at the share price below $110, iRobot stock is undervalued based on this model, and at $80 is a steal because it matches the fair value of the bearish case with a 15% discount rate. Today, the stock trades at $83, which is very close to my target. In conclusion, iRobot is operating in an industry with tailwinds, where more and more technology will enter the households. I myself have a Roomba robot and I don't see the point to ever buy a traditional vacuum cleaner again. I'm very happy with the Roomba and most likely I would buy it again. It has a competitive advantage in the high-end segment where it holds a near monopoly. It continues to innovate and has 2 robots near launch. It is launching the iRobot Select service where it will earn a recurring revenue stream. To mind, of course, are the risks regarding tariffs and supply chain disruptions. However, I see these risks to be more temporary and not a long-term problem. My fair value calculation of the stock is that it is undervalued under $110 and a fantastic risk reward at $80. That's it for today. I hope you got value out of the video, and if you did, I would appreciate if you could give it a like and consider subscribing for more reviews on hidden gems. Before we go, I must remind you that I'm not a financial advisor and this content is not financial advice. It's just my opinion and you should do your own due diligence before investing in any product. Have a great day.